You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, that rockin' tune means it is time, once again, for the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever exciting, ever frigid these days Options Insider Radio Network. We're beaming to you live from the Options Insider HQ here in scenic and sunny and minus, I think, 5. I don't know, with the wind chill is probably a lot lower here in sunny Chicago, so a little bit frigid. So cold, the schools are closed. That's when you know when it gets pretty chilly, when they start shutting down the schools. But nonetheless, we soldier on here with the old program, except for Uncle Mike Tusaw, who was, I believe, the weather just simply cut off all access to St. Charles out there. But of course, we do have the the rest of the roster here on the old Option Block program. And of course, we have assembled, if this is not enough for you, we've assembled over 400 hours of this program available to you in finer podcast purveyors everywhere, including iTunes, Stitcher, Aha, Mobile, TuneIn. Let me see if I'm sure I'm forgetting a few here or there. And if that's not enough for you, if that's too much for you, just go to the mothership, theoptionsinsider.com. You can stream it directly from the website, download it, whatever your preference may be. While you're listening, you can, of course, read the rest of our articles, check out the breaking news on the options market, get some education, some analysis. A lot of unusual activity. We got boatloads of that up on the site as well. So no shortage of things for you guys to do while you're streaming some fun shows over at the mothership. And if that's too much for you, if you don't even want to go to the website, it's too hard to hit that button, type that into Google, bookmark it, whatever the case may be, then just go grab the mobile app available for iOS, Android, the Fire OS. It's all baked into there, all 13 programs. You can make your own playlists. You can tune in and say, you know what, I'm going to leave out every show with that Giovinazzi guy because he's kind of crazy. Go ahead, it's your playlist. Do whatever you like. So mix and match till your heart's content. And while you're in the app, of course, you can also reach out to us via all of our preferred methods, including email, social media. You can even use the various platforms out there. Of course, the website, comment letter, no shortage of ways. I should say comment system, no shortage of ways for you guys to make your opinions and comments known to us here. And of course, ask some great questions. We'll get to quite a few of those hopefully today because you guys have been just lighting it up from a questions perspective. But before we get to that, let me introduce the rest of my cohorts who were able to soldier through the weather and make it onto the program. Starting off with he of watch and hat fame, none other than the Viceroy himself, Mr. Alex Jacobson, beaming in from Casa Jacobson, a.k.a. the Clock Mecca. Mr. Viceroy, welcome back to the program, sir.
It's good to be here, Mark. And I didn't soldier anywhere. To your point, I walked downstairs, put the dog on my lap, and worked from home today. And the trading desk this morning, when I am the trading desk to get a sense of what's going on, they're talking about nicknaming Chicago as the planet Hoth now from the Star Wars movie.
I like it. All we need is some Imperial walkers, and we're good to go.
Yeah, no, it is cold, man. It is cold. But anyway, not a big day in the averages, but a big day kind of underlying it. Two option perennial favorites, Priceline and Regeneron. Priceline moved $100 today. And the reason I kind of want to showcase that is, again, that's the classic case of the argument, sell the volatility going into earnings, and it works 97 out of 100 times. Well, here's 98, 99, and 100.
Yeah, this leaves a mark.
Yeah, I think the straddle went out at 50 and was trading at 100 for much of the day. So Regeneron Biotech, good news, up 20. A stock I watch a lot, a stock I have a personal attachment to. My old finance prof was CFO until he retired. But the other interesting thing going on today, and I'll just talk about this a little bit, is the Buffett news. Anytime you get that news that Buffett sold Exxon and Buffett bought Deere and Buffett bought more IBM, public does the same thing the next day. They reposition. So they sold Exxon down for the last couple of days, and IBM had rallied. Deere, I guess we're waiting on earnings, but some repositioning going on today.
Lots of good stuff. We will get to all of that and much more in the trading block. But first, let me introduce our final compatriot here on the old all-star panel. You know him, you love him, as the Rock Lobster, beaming in from, 27 feet of snow out there in Maine now, Mr. Andrew Giovinazzi. Mr. Rock Lobster, welcome back to the show, sir. Glad your Skype is still working.
27 feet is, I don't know, because I can't see the top. So you can't measure it if you can't get to the top of it.
Next spring or summer when it thaws, you have to go out and put a nice 28-foot pole in your yard so you can have some sort of...
Maybe I'll just chuck a pole out. You could probably measure it from the second story. You could just chuck a pole out and see how far it goes in.
I hope you got those nice canned preserves to keep the family going through the lean winter months.
Yes, pickles. We have a lot of pickles.
Good stuff. Good stuff.
A lot of pickles.
That's why I don't live in the hinterland, sir. We get cold. We just don't get the 27 feet of snow to go with it. All right, with the team mostly assembled, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. Like the man said, this is the portion of the show where we break down what was moving, what was catching our eye, what was lighting up the old tape today. Like Alex alluded to, not a heck of a lot from a broad market perspective. S&P pretty much unched on the day, down off a little bit more, but nothing really to write home about. Qs rallying a little bit of tech love over there on the Qs, and the VIX cash pretty much hovering unched right around the 15.5 range or so. So broad market speaking, not a heck of a lot really going on to catch our eye, but like Alex said, there was a lot underlying that did catch our attention. We'll start with the one he was just referring to, that perennial options favorite. Of course, Priceline, they announced this morning before the bell. So hopefully if you're looking to play Priceline earnings, you already did so. Otherwise, you missed the boat, unfortunately. Closing today, 12/18/31. This thing's just a beast. Like I said, up about 95, nearly 96 handles on the day. Let's see what the intraday high for this one was. Also closed right very close to its high, only about $4 off its high of about 12.22.5 or so. So this thing saw some love today. Like Alex was saying, that straddle about pretty much half of the move. So when we talk on this show and other shows about strategies for earnings and should you go long or short, pretty much the perennial question. We get that every earnings cycle like clockwork, and we get it in mass. There really is no one preferred way to go, except for a lot of people tend to maybe like Andrew style trade ahead of the earnings event and get out of it. But if you play through the events, you realize that it is quite the aggressive coin flip. And for all of you out there who like to blast away at vol hopefully you do so in a risk mitigated fashion. You have some wings out there to catch you in these types of scenarios, because when the underlying moves 2x to where the straddle was trading, you've got some issues. Priceline averaging about 33,000 contracts a day. That's fairly light for them, given what they've been doing some other sessions, but of course doing about 100,000, a little bit less than that today, contracts today. So about 3x their ADV going up out there in Priceline land. Surprisingly, net delta is still short on the day, so we didn't just see the call palooza. It was actually about 1-to-1 calls and puts out there, which is highly unusual for a day when the underlying moves so demonstrably and dramatically in one direction. That's usually when we see people just flocking into the calls pretty much willy-nilly and or blasting out some puts, and they certainly could have been doing both of that here, but usually we see some sort of premium, some sort of extra juice out there in the call land, and we didn't see that today, which is kind of interesting. So aside from the Priceline, of course, I'm sure Priceline was lighting up your pitch chat today there, Andrew, but what else caught your eye in today's market activity?
And mostly was the lack of activity that caught our eye. I think, Fred, just from a volatility point of view, there's a lot heavy future premium, VIX future premium, and it started to come in a little bit today as we wait to see what happens with the all-powerful Greece. That whole thing is resembling a farce on how they're like, we're not going to do this. We're going to do this. We're not going to do this. They're running a country that way. I would have to think that all the people voted for Syriza with all their empty promises. Maybe unless these guys do a miraculous turnaround, I don't think they'll be voted in the next time, because all they basically done is tank their own markets and made everybody really nervous, at least in that country. So, I think that, if anything, it's still kind of keeping our volatility products juiced to where they are. It looked like the market, again, still wants to rally, and that's basically where we are. As far as anything of real interest, it looked like the volatility in USO has come in, or the vol products, in oil in general, started to drift back a little bit, not a lot. Maybe oil has found let's just say its range. We're not making new highs in implied volatility. So, maybe this is something around 50, up or down a few bucks, and this is kind of where we're stuck at for a while they settle all the inventory stuff. So other than that, NASDAQ is, again, notching up another, the Qs are notching up 0.5%, and they still look pretty good.
Yeah, looking here at Crude, I've mentioned before, we definitely seem to have that tug of war going around the 50 handle there, and that continued again this week. We were above 50 handle for a while there, and now we slipped back about over 4%. Again, dropping back below the 50 handle. Again, quicker buildup of oil inventories than people anticipated, I think, like Alex alluded to. Also, the lemmings jumping in, because when Warren Buffett, the Oracle of Omaha, says it's time to get out of petroleum and petroleum-related names like Exxon, they tend to follow suit en masse. Of course, look at all the newsletters and other things out there that are devoted to Buffett following. So there is a huge ripple effect whenever he does anything like that. It is kind of interesting timing for them getting out of Exxon here when oil is at a position where a lot of people are thinking, hey, perhaps there could be better days ahead for crude. Of course, clearly there are others thinking there are not, and the Buffett team, clearly one of them, because they're saying that we're going to wash our hands of this holding. They're not known for jumping the gun or making rash decisions. So this is not like Soros jumping into tech names right around, let's say, February of 2000, one of the worst timed investments in modern history. So this is a little bit more thoughtful. So it's interesting for that perspective alone, for all the bulls out there who were saying, hey, we have to rally hard these days, and I have to buy crude at this $50 a barrel level. This may have given them some pause. Alex, you mentioned, of course, crude going up in Priceline. What else caught your eye? And what's going on over there from a crude perspective? What do you see at OX these days? Is it USO lighting up the tape? Are they looking at the big futures and options? How are they playing crude these days? Are they going to more the XLE and the more broadly distributed names? What's the big play at OX these days from a crude perspective?
So the bad answer is it's everything. And as much as we've kind of voiced our concern about USO on the show, it's generally one of the 3 or 4 most active names in both the OX and the Schwab system. Mike Zaremski on the futures desk still is, I'm looking for a busy analogy, a clean busy analogy, but still doing a lot of the crude futures and the crude options. And that's also business we see on an international level. That's business where we see a lot of that coming from our client base in Australia and Singapore. But it's everything. The last couple of days they were selling Exxon. They've been selling Conoco. People are still playing the Baker Hughes, Halliburton, the drillers, but it's almost everything oil related continues to remain active. I'll tell you another name that we did today, which has not been active for a while, is Wal-Mart. Obviously had earnings and had, the announcement about raising the wage. Wal-Mart, which, a couple of years ago, that stock was the darling of the market. I mean, it traded the way Apple traded. Everybody had to own it. It had gone quiet, and we saw some Walmart activity today. The other kind of perennial, and this is one of my favorites, so I look at it every day, but Amazon back up near the highs, back up in the 380 area, bucking the trend today up. I think it was up about $6 or $7, up a couple bucks in the morning. That's also an option perennial favorite stock, and we saw bunch of that going up on the tape today as well.
Yeah, we don't spend a lot of time talking about Walmart here on the show, but it is a bit of a perennial favorite, particularly around earnings season, and it's certainly a bellwether for the broader economy. I kind of joke about Walmart and McDonald's, where they go, the economy tends to follow, and the market not liking what they saw out of Walmart today, clipping them to the tune of about 3% off, about 2 in the orders or so, closing at $83, $83.50 or so. And we saw that straddle going out last night at about $2.30. So it outperformed that straddle, but not aggressively, certainly not a Priceline type move, nor would you really expect that out there in Walmart land. This is the name that's been doing about 30,000 contracts a day of late, doing about 80,000 so far today, or total, I should say, today. So interesting stuff. And the sales were all right. Everything else was all right. I think, like Alex alluded to, the wage thing, which is a perennial issue with Walmart, seems to have spooked folks a little bit. Some other names coming out. We talked about Priceline and T-Mobile. We do have Intuit after the bell. It's not the sexiest of names. We don't talk about it all the time, but it's an interesting one to kind of a bit of a barometer of some of the older school tech names out there. They closed today at $91.11 or so. Not really a lot going on for them. They've been averaging only about 1,000 contracts a day, doing about 12,000 today. So not a lot of people really piling in to Intuit. We'll keep an eye on them as the show progresses to see perhaps if something emerges of interest there. Meanwhile, we're going to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome back to the Odd Block. This is, of course, a portion of the show where we take a walk on the wild side and tend to dive into what's cooking on the other side of the tracks in the options market. Some of the more bizarre paper that's catching our eye today. Sometimes it's just sizable, sometimes it's just weird, sometimes it's all of the above. Going to kick things off with something on the sizable part of the spectrum. This certainly probably takes the cake for the mega trade of the day. I didn't see any individual trades going up that dwarfed this. Perhaps there was one, but this one certainly is at the top of the list. This is a big trade going up. Talking about a lot of crude, talking about a lot of stuff going on in the petroleum sector, so no surprise, we're kicking things off in the odd block with Boardwalk Pipeline Partners, ticker symbol BWP, closing today $16.61, pretty much unched on the day. This is the name that does about 5,000 contracts a day, so not bad from a odd block perspective. It's over 10x what we usually talk about the names here on this show. And today, just a whopping 172,000 contracts going up. Pretty much 1,443 to 1 calls over puts. That should give you some idea of where the action was. Yeah, it was all calls all the time out here. And what we saw was a pretty sizable ratio roll, I suppose you can call it. In particular, it was out in the March and the SEP expiration cycles that really caught our eye. We'll start with the March. That's where the lion's share of the activity went up today. We saw paper coming in and trading a total of 125,626 of the March 17 calls. Going up for, well, the whole spread went up for $1.05. We'll have to see where the individual legs went up. Of course, that's on open interest of 123,000 and some change. So does have the whiff of closing about it. And then turning around, of course, they went up probably in the 60-cent range because these calls have about 60 cents worth of value on them right now from a parity perspective. So this guy kind of dumped them out at parity paper selling. I should have added that at the beginning there. And then rolling on out to the SEP time frame, giving himself a little bit more time here and a little bit higher strike. He picked up the SEP 18s, doing those. Let's get the total number here, listeners. A whopping 45,366 times on open interest of just 30 contracts. So clearly that is opening the whole spread, the essentially 1x3 spread going up there for $1.05. This was an interesting one. Certainly looks like our friend perhaps taken off the March a little earlier, taken off the March, but he's taken them off. And like I say, he looks like he dumped them essentially for right around parity. He didn't get a heck of a lot for those calls, so he really wanted to get out of those things. And then rolling them out to a smaller amount, a little bit higher up on the 18 strike out here in BWP. Looking at a chart of BWP, it's been some vacillating action for the better part of the last 6 months or so, with the top of that seeming to have come right around the 18 handle of late. Our friend here hoping that is not the case going forward, because he would very much like it to continue northward over that 18 handle. Mr. Rock Lobster, what's your take here on our friend doing A, so much size, B, doing it on a bit of a weird ratio, C, getting some weird prices perhaps on those marches, and then D, picking another different strike out there in SEP? A lot to chew on in this one here.
Yeah, with the March calls, it looks like that was a straight close. The block was just like real close to that open interest number. So they're closing, and I think, and one of the things it looks like, real simple, I think they just want to buy a little more time. And I think the pricing was sort of right for them. That's why they, I guess, picked the ratio at 3-1, because they collected some 60 cents for all the 17s and then rolled into the 18s, and I had them almost like 180 versus, so it's almost like a slight credit, I believe, when the prices were all said and done on this one. 65 versus 170, so that would be $1.80, $1.95 over 170. So they're trying to pick that up. I guess the easy way to say it is they want to sort of take their money off the table. And I don't know if they made a whole bunch on those March 17s. And they're just reducing their size, but it's for a company like one of these pipeline companies to make that kind of a move. I don't think they got it the first time, and they're just trying to buy some more time to get it the second time. I think that's the simple answer there. I mean, it spent the whole year pretty much below the 18 handle from October, middle of September till now. I mean, it did trade over $20 But since then, it's gotten, pretty smashed up. So, they would need a run back to the highs really to make this position work out.
Yeah, our friend here quite enthusiastic about the chances for her BWP in the near term. I should mention that price I mentioned of $1.05. That was the 1-to-1 price. That wasn't on the ratio. The ratio worked out to the price Andrew mentioned there. So if you're a little confused, wait a minute, they did it for $1. No, they did not. All right, moving on to our next name. This is one you may have heard of. Listeners, goes by the name Microsoft. I'm not sure how you pronounce that. Ticker symbol MSFT. Closing today, 43.5. Pretty much unched. Yet another unched name on the day. Of course, this is the old softy itself. We've talked a lot about this name in recent months and in recent years, really. They've kind of their evolution from the most reliable premium sell on the planet to now you kind of have to watch this name. They actually have some movement, some volatility, some action out there. And they've been averaging some decent paper out there as well, about 150,000 contracts a day. Doing a little bit lighter than that today, doing about 140,000 today. So it wasn't net overall volume that caught our eye as much as it was one interesting trade going up in the Jan 2016 expiration cycle. In particular, is one of my favorites. It was the old risk reversal. Let me pull up the strikes here so we can get the exact trade. So we noticed on the sites this morning just a hair under 10,000 of the Jan 2016 35 puts going up about 9,575 times over the Jan 2016 50 calls for a net of a nickel. And they did it about 10,000 times total. I see a total about 10,600 having gone up on these Jan 50s. And let's just pull up some data on this one. Went up in 2 blocks, as you might imagine. Pretty sizable open interest on both of these strikes as well. About 116,000 contracts open on the Jan 50s that I'm looking at right now. So it makes it a little bit hard to intuit exactly what's up. Kind of has the feeling that this might be closing. However, you look at the puts, they really blasted out the puts here, actually printing through the bid there at one point, which is usually indicative that they kind of want to get this done and they kind of want to get these puts off, and they want to do it aggressively, which is not always a hallmark of a closing trade. That usually tends to correlate with an opening trade. So it's possible we could see someone piling in to this open interest. The calls are certainly the most open strike out here in Jan, with well more, 2 to 3x more than any other strike out there. So it'll be interesting to see if our friend here is adding to his position tomorrow or if he's unwinding it. Mr. Rock Lobster, how do you fall on this trade? It is a bit of a puzzler.
A head scratcher, a chin wagger. I don't know. All those things. I'm thinking it has all of, unless they put this trade on when Microsoft was trading 50 and they're starting to unwind it now. So that's way tomorrow we would see if there's more volume going up. Basically, they put on this collar. If they put on the collar, they probably did it for much better prices than it's trading right now, because those 50 calls would have been worth an awful lot if they collared some stock higher. And right now, them taking it off, I could see how they could be buying call and selling put to unwind it. However, that being said, normally when you have a closing paper, you're not in such a huge rush to bang out those 9,000 through the bid, especially in Microsoft. So it's surprising that they would be closing that trade like that. I think it's new paper for that reason. So, and it would be, a nickel. That's a low cost. And I think there you'd get some performance out of this thing. There's a delta to it of around 45. So, not a bad delta if the market starts to take off a little bit, maybe 24. Yeah, it's about 50 deltas. So a way to be long Microsoft and looking for a bit of upside there. Again, I like risk reversals for credits, but a nickel is close enough. So, and if you get back to the highs anytime during the next year, I think they'd make a little money on this. And again, relative to the margin they have to put up, they'd probably outperform just a long stock position. So it's not a bad risk reversal if it is an opening one, but we will see from the open interest tomorrow if it comes in a little bit.
Yeah, some other big paper going up in Softy today too. We also saw, looks like a little bit closer to home, the March weeklies, the puts going up. Let me see if I can find the exact straight. March 44 puts. These are the weeklies that expire in about 36 days or so, the end of March 27th. They're going up nearly 15,000 times on zero open interest. So an opening trade out there as well, perhaps related to our friend playing in Jan. That would be a weird trade, Jan versus the weekly March. But we've seen odder things going up out here in good old Softy and odder things in the old odd block, hence the name. All right, we're going to wrap things up here on the old odd block with a name we haven't talked about in quite a while. I'm not sure actually we've ever talked about him on this show. This is the Boston Properties, ticker symbol BXP, closing today 138.5, roughly down about $3.30, or a little more than 2% on the day today. It's a name that does a whopping 563 contracts, doing about a little over 2,000 today. So a bit lighter than the name we were talking about at the top of the show, BWP, doing 100 some odd thousand contracts, but still of interest to us today. We had a bit of a diagonal going up out here in BWP. So, Mr. Rock Lobster, take us home on our friend who's smiling all the way to the bank here in BXP.
Yeah, when I looked at this, it was, if I'm reading this, it looks like they put on some sort of diagonal that they wanted a delta out of the thing. There's a little bit open interest in the Feb, so I think the Febs are closing. And the March 145s, I think, are closing as well. So, in the old days, you buy kind of an out-of-the-money call or near-the-money call, and then you sell an in-the-money against it. It acts like a put. And they got Boston Properties has dropped here about $9 from the highs, and it looks like they're just kind of unwinding it and taking the money. Those Febs traded above parity, about 45 cents above parity, the Feb 130.5s. That's probably paper buying them back, and they're getting out of their March. So I think this was a diagonal, kind of an in-the-money diagonal trade that seems like it made some money for them. Or somebody's putting on a buy right and doubling the open interest, which I doubt. But I don't know why you'd put on the buy right with the options expiring tomorrow, I guess, unless you want to take delivery. So I'm going to guess it's a closer. And they probably did really well.
Yeah, they're probably happy campers, I would say.
I think so, but I thought I would just, you don't see this kind of diagonal very often. As a short play, it's a sort of a protected short play. So I thought it would be an interesting one to highlight here on the old odd block.
Yeah, I usually see people closing out a spread for $8 and change. It's either they're very happy or very sad. Usually, that's usually a good indicator. When they're closing it out for a nickel, that's something else. But $8, then something happened there, one way or the other. All right, well done, Mr. Rock Lobster. Now it's time for us to keep on rolling right on into Alex's favorite portion of the show, because he gets to put on his hat and dive into the weeds. It's time for the Express Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, like the man said, this is the portion of the show where the Viceroy takes the reins and I take a bit of the rest. Yes, it's time to go behind the scenes into the land known as Options Express by Charles Schwab. Alex, you got the Fed, you got oil, you've got some names lighting up the tape, so a lot to choose from over there. Where are you going to take us on our tour behind the scenes of OX today?
So I'm going to take us to mobile trading. And let me, first of all, make the comment. I'm going to talk both about OX Mobile and Schwab Mobile. And Schwab and Options Express are separate but affiliated companies. That's the legalese I have to add. But we've talked a lot on the show about the growth of mobile trading. And ironically, Marissa Myers from Yahoo is at a tech conference now talking about the growth of mobile. At Options Express, you can do everything on the mobile platform. You can do the all-in-one trade ticket. You've got a fully powered idea hub. At Schwab, the mobile platform and the Schwab platforms, in terms of the adoption of Options Express tools, that's an ongoing process. But on the Schwab mobile platform right now, you can see a version of Idea Hub. It's a light version, and what makes it a light version in premium harvesting, it has credit spreads. It doesn't have the full iron condor yet, and that has to do with a 4-leg trade ticket on mobile, which, again, is available on OX, is coming rapidly on Schwab. But, you know, if you're traveling, and I know we talked about this, why volume won't decline the day before Thanksgiving and the day before Christmas as there's more mobile adoption, but mobile is becoming a larger and larger share. If you are a Schwab or an OX customer and you haven't downloaded the mobile platform or you haven't played with it yet, yeah, I hear the comment a lot. People are going to use it for quoting, but they're not going to adopt it as quickly for trading. That is not the case. The adoption for trading is occurring at a rapid pace, and I personally think some of that is the size of the mobile screens, the iPad and the iPhone 6 and the new Android. I mean, I was a dinosaur. I had an original iPhone up until a couple months ago. In fact, when people would look at it, they would say, is that the iPhone 2 or the iPhone 3? I'd say, no, that's the iPhone. And then I got a letter from AT&T that said, you got to upgrade your phone. Your phone is going to die. You're going to lose some of your capabilities. And I went out and got the iPhone 6 for both myself and my daughter. And I find now that I don't just use it for quotes. I, in fact, have both an OX and a Schwab account. And if you haven't downloaded the mobile app, by all means, download it. And if you are one of those folks who it's going to take a little bit of time before you really want to trade on it, then yeah, just use it for quotes, use it for price discovery, use it to stay in touch with the market when maybe you're dashing between appointments and away from a desktop. But mobile certainly is becoming a factor in the industry. And if you're an OX customer, download the mobile app. If you're a Schwab customer, or what we call a dual, both OX and Schwab, make sure you put that mobile app on your device and start to use it. And I hate to use the term, even if starting is just playing with it, you're going to find that after you've had it for a couple of weeks, you are, in fact, going to have a day when something moves and you're going to enter a trade on the mobile app. So they are robust, they are great tools, and you should be using them.
Yeah, especially with the proliferation of just massive size screens out there. I know I have a over 5-inch screen in my pocket all the time, and then I have, my iPad lying around and everything else. So it's really, some people have much larger phones than that. So it's really, if you're not using the mobile apps these days, they really are quasi desktop apps at this point with how much real estate you got in your pocket. So go crazy, folks. I'd love to have our show in that mobile app one of these days, too. Then listeners can stream the option block while they're checking out their quotes and doing all that other fun stuff. But we'll get to that down the road. Meanwhile, it's time for us to keep on rolling. It's Thursday. That means it's time to open up the old mail block.
It's time to take your seat on the all-star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the man said, this is the portion of the show where you guys get to take the show reins in your teeth and run with them. And you got a lot of people writing in these days. I love it. Keep the questions coming. No shortage of ways for you guys to really make your comments and questions known to us. Surf on over to the website, theoptionsinsider.com. Post a comment on the website. A lot of you like to use the website feedback form. You can certainly do that as well. Questions at theoptionsinsider.com also works, as well as facebook.com/optionsinsider and stocktwits.com/optionsinsider, I believe, as well as twitter.com/options. And of course, it's all baked into the mobile app there as well, except for, I believe, StockTwits. You got to find us yourself out there. All right. Going to cruise through as many of these as we can. Start off with some quick comments, some love coming from the listeners. Always like when the love pours in, particularly from overseas. This one comes from Martin. He writes, "Thank you that you share this precious information on your show for free. A great job. Well done, Martin from Germany." Well, thank you, Martin. We do have a lot of listeners over there in Central Europe, so glad to see you guys are benefiting from it, and glad to see you're enjoying the program. You guys are the reason that we do this after all. Moving on to Kevin. He's also got some love and a little bit of taking me to task as well, so we'll get to that. Kevin writes, "Hi, Mark. Love your shows. Not to be an ingrate for all the great free info and entertainment, but couldn't you put out your podcast the same day you record it? It's always strange hearing you talk about Thursday's market after Friday's close. It's not a big deal, more of a first world problem, really, but posting sooner would significantly bump up your cool factor." Thanks, Kevin. Well, Kevin, that is a good point. We've wrestled with that before. Part of it is the fact that, of course, it's an hour show. We start recording it here. By the time everyone gets together, we can't do it before the close, obviously. So we start as soon as we can, which is 3 o'clock Central, 4 o'clock Eastern. The show runs for an hour. So we have to record the show. And then by the time that's done, I have to hand it off to my editors. Part of it is me being a little bit of a stickler for audio quality. I don't want it to sound like, it's some AM radio you're tuning into. Sometimes we have no choice. Tucson's Skype connection falls out, or the Skype gods in Maine don't smile on us. We can't really control that, but we do our best. And of course, if you know anything about audio editing, it's mostly a one-to-one type thing. If it's an hour show, you kind of got to listen to it for an hour. You can speed it up a little bit, but you can't really do that much to really speed up the process. Then our other people review it. So there's a couple of layers of authentication that goes on after I hand off the show to our team here. So the soonest we could probably get it out would be relatively late, a couple hours after 5 o'clock when we stop record, 4 o'clock when we stop recording, probably 7 or so, maybe 8 Central, at which point it's kind of getting late, 9 o'clock Eastern. Not many people are really going to tune in then. So we get it out the next morning. That's kind of been our MO from the beginning. So you mentioned here listening to Thursday stuff after Friday's close. That one's on you. You can listen to the show a lot earlier if you like. It goes out in the morning the following day. So you can get it on your commute to work or maybe while you're at work and listen to it there. So it's not really that far removed from what we're talking about. We're talking about last night's close. It's the following morning. If you choose to listen to it on your way home afterwards, of course, you can do that too. Then it might be a little bit disjointed. But we've got people listen to these shows years and years later. So I know that at the end of the day, a few hours difference probably won't make a lot of difference to a lot of people out there. But that said, if you are one of those people like Kevin who would like to hear it, maybe even instantaneously, we are working on a few things that we can maybe help that with for you, including some cool technology. There's a new site out there called Mixlr, MIXLR, that allows you to actually stream internet radio live, and we might start doing that. So people in the past have joined us on our Skype call and kind of done it that way. That's been a bit of a back channel way to do it. So if you are out there like Kevin, you want to tune in live, we might have that availability up there for you in the next couple of months, so you can hear the show, warts and all, hear how the sausage is actually made. And those of you who don't want that can tune in to the nice, professionally edited version that comes out the following morning. So there you go, Kevin. We hope to have an answer for you guys soon. And for the rest of you guys, keep listening. We love the love, however we can get it. Let's see. All right. Let's keep moving. We'll get to a bunch of these if we can. Here's an actually interesting one. This is not a question we've gotten before, which is interesting. This comes from Jada Tora. He writes, "Hi, love your show. You guys do a great job. Keep up the good work. My question, if I'm looking at a pairs trade, for example, long Facebook, short Twitter, obviously I can do it by buying, shorting the stocks. I was trying to figure out if there is any way to effectively do the same thing with options and what the advantages might be, if any. I thought of doing a synthetic long short, but I didn't see any advantage since I'll be naked short an option for both names. But maybe the margin treatment is different. Long call on one, long put on the other doesn't seem to make sense since I'm pretty much guaranteed to lose the premium on both those positions. Is there another or better way to structure this type of trade using options? Thanks, John here. This is John is his name. This is the good. We don't get a lot of stock pairs trades. We think about pairs trading here. We usually think about the volatility perspective of trading vol one against the other. We don't think about the actual delta focused underlying. But certainly you can do it with options. He points out a few interesting drawbacks to doing just that, which is of course if you have these combos on in different months, you're going to have short legs. So maybe we'll start there. Alex, you're kind of our resident go-to margin guy here on the show. What are some of the pros and cons from a margin perspective of doing it with the synthetics in the different stocks versus doing it in the stock itself?
So I'm gonna answer two ways. From a margin perspective, it obviously can be cheaper, can tie up less capital, but I'm going to go back into, I used to call on a hedge fund that did pairs trading, and they did it with options. And here's what they did. They bought in-the-money debit spreads below parity and then traded one direction versus another direction. Now, as soon as I say that, I know that the listener is going to scratch his head and say, well, how hard is it to find in-the-money debit spreads below parity? The answer is not hard at all, but depends how big you think the moves are going to be. And that's kind of the challenge. And I will tell you one other challenge that the hedge fund had is many times the reason they were doing a pairs trade is they had identified an anomaly in one of the issues and they were pairing it off for risk management. And one of the things you got to be careful of, and this is why the in-the-money debit spread works so well, is the issue they would identify that would make them want to put one side of the pair up generally pumped volatility. And the thing about doing an in-the-money debit spread is you kind of wash the volatility out. Obviously, if you're buying the spread below parity, you're not paying a volatility premium, but then it's a spread, and you got to be patient and, taking it off, you got to take off the spread side. But I wouldn't only think of it from a margin standpoint. I think of, if I think these things are going to take a few weeks or months to work, then look at an in-the-money debit. If you think they're going to take a couple days to work, then the challenge to spreading is it's just short-term, and you are probably better off in the cash product.
Mr. Rock Lobster, same question for you. You probably talk about pairs trading quite a bit over there in that pitch chat. What do you have to say for our friend here, Mr. John, who was interested in maybe using synthetics or perhaps Alex's suggestion of the spreads to go the pairs route using options?
Right. So when we do most pairs, we do some index pairs, which it's mostly buying kind of near the money cheap stuff and then selling out of the money expensive stuff, which is a way to create the pair. So let's say they are more interested in selling out of the money spreads and something they think is going to go down on the side that goes down, and they finance a more in the money type trade. So you sell some, let's say you sell some upside call spreads in Twitter and you buy some in the money calls or call spreads in Facebook. And then if everything works how it's supposed to work, your Twitter spread should go out worthless and at least pay for your Facebook spreads. And if Facebook goes up against, then you win. So you can think about doing it that way as well. When I was chatting to you guys, I thought the in-the-money spreads was a good idea. You could sell opposing in-the-money puts or calls and puts against each other. So you sell an in-the-money call on Facebook and you sell an in-the-money put. In this case, an in-the-money call in Twitter and in-the-money put in Facebook. The problem is you don't gain really much risk control benefit from the options that way. So if you sell a more in-the-money option and then buy maybe an out-of-the-money option to hedge, then at least you gain a little risk control on the trade, which is essentially what Alex had said. So, you have to think about, where the names are and where you want it to go. And but you can create different things. Now, if you think something's going to move relatively quickly, long options are certainly an answer, or you can deal with options that are just slightly more in the money that have less decay to them. So, there are ways if you think about it, but I would say the whole point of using options in a pairs trade is you want to generate less risk but more potential dollars. And generally what that means is spreading of some sort, which you can't do with the underlying. So if at minimum, if you're creating some kind of spread, you are taking a lot of the decay out of the picture, and you should stick with it that way. That way, at least you're getting the risk control benefit of the options.
Good stuff. I like these questions. Listeners getting into some interesting territory. I don't think we've discussed, like I said, pairs trade on the show. Great question there, Mr. John D. And you guys, a lot of you send in great questions. Not going to have time to get to any more, unfortunately, today, including Sanjay. Sanjay, your question is a book. We'll see if we can get to pieces of it, perhaps, on an upcoming show. A few others of you have written in some epic questions as well, multi-part extravaganzas. We'll see what we can do to get to at least pieces of those in future shows. Maybe we need to just do a whole listener mail extravaganza, because some of these questions are just we love the questions. Keep them coming. It's just some of these are a little bit dense to get to on a show. Like you like to joke there, Andrew. People sometimes request a full webinar for free in 5 minutes on the show.
And I want it now, and I want it to be good.
They want it now, they want it good, and they want every question they've ever had answered. We love that. Keep that inquisitive spirit coming, listeners, and we'll see what we can do to work more of your questions into future shows. Meanwhile, it's time for us to keep on rolling right on into our final segment. It's time to move on to Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show where we talk about what we're watching for the rest of this week. Quick check-in. I mentioned Intuit at the top of the show, and they're moving pretty good. They're moving about $3 here in the after hours, which is over 3% for this name, for closing at $91, trading about $94 in the after hours. So not a bad move for this name. Like I said, it wasn't really pricing in an enormous move. So that's, for all things considered, Intuit is fairly decent activity out there. And aside from that, we've been such a busy show, we didn't even mention the Fed. Probably leaning that they're not really going to raise in the aggressive fashion in the near term. That was, of course, big news on the market this week. And a lot of other things cooking. Not a lot still coming down the pike from an earnings perspective. A few names we'll keep an eye on, but not a lot really big market movers left to discuss. But still, there's a few things to keep an eye on. Mr. Viceroy, we'll start with you. What are you watching for the rest of this week into the weekend, sir?
So looking at the price of oil, because obviously that's driving a lot of what's going on here, I'm going to talk about the 10-year again, and I know that everybody rolls their eyes, but our 10-year in the last month has moved 50 basis points on yield. Now, normally that would have been an enormous move and would have gotten a lot of attention, and some of it is Greece and some of it is the Ukraine, and I don't think much of it is the Fed, even though the Fed said it was going to continue to be patient. A month ago, you saw the 10-year yield in the 160, 170 area. We're up around 211 now. And one of the customers I spoke to today, who is a listener and reminds me of everything I say that sometimes isn't on target, said we moved more in the last month than the German or the Japanese 10-year yields. So the market's been pretty resilient with a big move back up in rates, but I'm continuing to watch rates. Watching VIX, I think if we get the sustained rally, we're going to take out 15. We took it out earlier in the week and then traded right back up. But basically, oil, rates, and the VIX. That's what I'm keeping an eye on.
The big three these days. Mr. Rock Lobster, what's drawing your attention for the rest of this week into the weekend?
Well, yeah, we got back to the point in rates basically before like the Greek and Russia thing. Somewhere, now we're back to mid-December again when we all thought the Fed was going to raise. And that's kind of where we were. I think, when the treasuries hit that 135 plus level, or the TLT did, sorry, when we were down 1.5%. There was panic. Dollars rallying, everybody's piling in, and now, not so much. And I think we will start to see that. The only place I think where there's a lot of premium overall is the March VIX future. I think that's the most vulnerable to drop. If I don't know when the sideshow stops in Greece, basically, because that's all it is at this point. The Europeans should just teach those guys a lesson and say, you know what, the EU is more important and the euro is more important than these idiots, and just cut them loose. And then they will come back to the table. I don't know. But I think the world keeps watching this when you have bad academics trying to create economic policy. Just doesn't seem like there's anybody running the ship over there. And I think that's really what's causing the last vestige of volatility that we have right now. So, and when that's done, I expect vol to be lower. We should be 14 or sub 14 relatively quickly after that. And of that, I would not be surprised if the NASDAQ hit 5,000 this year. Would not surprise me. And I know that's still quite a bit of a bump, but it's not going to surprise me.
Yeah, well, after you came out of the closet last episode as a true and dyed-in-the-wool bull, that won't surprise any of our listeners either. You're on the two-saw train, up and away, which is interesting. And, of course, advocating for some tough love out there in Greek land, which is probably they could use a little bit of it out there these days. All right, listeners, that's all the time we have for the Around the Block segments. Also, all the time we have for this episode of the Old OB. But before we go, let's check in really quickly with each of my cohorts here, see what they have cooking that may interest you. Starting with you, the Rock Lobster. What's cooking in the land? Oh, the pit.
Mark just had a great webinar at Option Pit about understanding what that income trade means. That was an introductory course as a segue into understanding income trading. We're going to do on the 28th. That one's going to cost you money. The one you can go to our website, optionpit.com, for free, or email me at andrew@optionpit.com for the course that Mark gave last night. It was our biggest webinar ever for our growing little company. So, and the next one will be on February 28th. And, and it's a good thing too, if you use the products like OX, like the Premium Hub and all that kind of stuff to sell juice and look at and understand what makes a good premium selling trade, or trying to set up how you manage those positions. That's what the course is for. It's a pretty dense course, but I think it's good for somebody that's just learning about options and learning about selling options.
And Mr. Viceroy, what's coming on the pike in the land of OX education and live events?
So for those of you not living on the planet Hoth, Jimmy Ruzan and his crew will be in Las Vegas this Saturday, February 21st, with their three-quarter day event. I looked at the site before I came online, and next week, I think we have about 24 webinars. So I'm going to just talk about a couple of them. On Tuesday, I am doing Hub for Futures Options. And unlike the other hubs I do after the close or in the evenings, I do futures during the trading day. So the day session of futures is up and running so we can see real quotes. Also on Tuesday, David Hightower is going to talk about global commodity deflation, why it's a good thing and how to trade it. On Wednesday, again, I think there's 8 or 9 webinars on Wednesday. I'll just showcase one, intro into streaming charts. Nina's going to talk about how to use the OX streaming charts tool. All the events are free. If you want to register for an event, come to optionsexpress.com, click on free education. Every education event is ahead of the login. All the events are free. There's a full calendar of events. Live event now, I think, almost every month. Jimmy's doing Vegas, then Denver, but they're all up there on the site. Come to optionsexpress.com. If you're a new customer, navigate down the page, see the terms and conditions for the $150 Amazon gift card for new accounts.
Take advantage of that offer, listeners. It's a good one. And on behalf of the Viceroy and the Rock Lobster and Uncle Mike, who could not be with us today, and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show and for sending in such great questions. Keep them coming. We love to hear from you guys, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.